Fundamental Australian dollar forecast. Bearish AUD USD is at lows not seen for well over 2 years while interest rate differentials hold sway. It's hard to see this changing. The coming week won't break this trend. Find out what retail foreign exchange traders make of the Australian dollar's prospects right now, in real time, at the DailyFX sentiment page. The Australian dollar market will receive plenty of economic data in the coming week, but none of it is likely to shake the currency out of its deepening downtrend against the US dollar. Snapshots of consumer and business confidence will top the domestic data bill on Tuesday and Wednesday, respectively. Meanwhile, a look at China's private service sector performance and overall trade both stand a good chance of influencing AUD USD, at least in the aftermath of their release, thanks to Australia's strong export links to China. However, that pair now hovers near lows investors won't have seen since February 2016. It is also right in the middle of the long, daily chart downtrend that has endured for all of this year. AUD USD remains in thrall to rising U.S. rates. The underlying reason for this weakness remains, of course, the widening interest rate gulf between Australia and the U.S. The Federal Reserve has raised interest rates 8 times since it began the process in 2015. The Reserve Bank of Australia, for its part, continues to hold its own key official cash rate at a record low of 1.50%. This has been unchanged since August 2016 and, according to futures markets, is still expected to stay put for the rest of this year and all of next. With this policy divergence as the backdrop, AUD USD can't hope for much in the way of long-term support unless the economic data should start to point unambiguously to the sort of inflation uptick which might mean that higher rates are priced in sooner. At last look, Australian consumer price inflation was running at an annualized clip of 2.1%, just within the lower boundary of the RBA's target band. So there's clearly no sign of any such data at present. Data won't change backdrop the coming week will not offer any, so it's hard to see the Australian dollar getting much traction. Of course, trade-related global risk appetite also plays a huge part in day-to-day market action. A lack of belligerent headlines on this subject from either Washington or Beijing could see that appetite revive, probably to the benefit of growth-related currencies like the Aussie. However, this sort of thing is impossible to predict, so, on available evidence, it has to be a bearish call this week. Resources for traders. Whether you're new to trading or an old hand, DailyFX has plenty of resources to help you. There's Oxer Trading Sentiment Indicator, which shows you live how IG clients are positioned right now. We also hold educational and analytical webinars and offer trading guides, with one specifically aimed at those new to foreign exchange markets. There's also a Bitcoin guide. Be sure to make the most of them all. They were written by our seasoned trading experts and they're all free. Written by David Cottle, DailyFX Research. Follow David on Twitter at DavidCottleFX or use the comments section below to get in touch. Other weekly fundamental forecast. New Zealand dollar forecast. New Zealand dollar braces as emerging markets. Stocks vulnerable. Japanese yen forecast. Bearish RSI signal emerges ahead of US CPI. British pound forecast. Sterling building a base on Brexit hopes. US dollar forecast. US dollar may extend rally on CPI. Churning market sentiment. Gold forecast. Gold price outlook complicated by rising bond yields and equity rout.